Let's get to the markets here. Bring in Tom Lee here at Post 9, of course, Fundstrat Global Advisors, co-founder, managing partner, head of research, S&P target for year-end 6,300. Great to see you, Tom.
Great to see you.
You like to call them granny shots, easy plays. In your view, I have to imagine that list has gotten longer.
Mm-hmm. Yes. It is, but it stayed around 35 names, but just high-quality names that are in the right sort of themes. We have 7 themes, and as long as they're in more than one theme, they become a granny shot.
Higher conviction on those names, I imagine.
Yes, higher conviction, and these are names that I think most people are going to be familiar with because they're large-cap stocks.
There's some discussion about cyclicals today. That they make sense, and a lot of people are looking to 2016 for analogs, but some argue that there's not the commodity price support that you might have had in a prior cycle. You buy that?
You don't necessarily need commodity prices to help cyclicals.
Yeah, energy, but even materials to some degree. Some are.
Yes, that's right. Yes, so for those, I would say yes. I'd say the outlook for energy stocks isn't great, as good as people might expect under a Trump presidency, just because expanded drilling is lower oil prices. But for cyclicals like industrials and financials, this is, for all the things you guys were discussing, a great environment, including M&A and cost of money falling and animal spirits and deregulation.
Do you think there is real reflation risk in the next, say, 6 months?
That is something that we can see how markets are repricing, and there's a measure called 1-year inflation 1 year forward. So what does markets think 1-year inflation is a year from now? That has been creeping up. It's actually now at 3.6. It's been a trigger point in the past where the market starts to worry. So whether it's the deportation that's causing that, or fiscal spending, I'm not sure. But, it is, markets are starting to think about it.
Or more of just better growth outlook could help inflation expectations rise. I guess where Trump trade 1.0 ran into trouble was around trade policy. And once we see what he delivers there in terms of tariffs, something he's been very, very consistent on. Do you think the market is looking past that, or everything else, the deregulation, the lower corporate taxes, is going to offset any weakness on trade?
I think that if someone was trying to paint a negative picture, that's the tariffs and the trade is what's on people's minds. But of course, that's the one where we don't know what the ultimate sort of policies will be. I'm sure markets will actually provide a lot of real-time feedback, and I think that's going to help shape what the policy is. So I think in general, we should expect a pro-business environment, one that's probably equity-friendly as well.
Where are we on fundamentals and just, in terms of this recent rally, in terms of multiples and your expectations on earnings as we head into next year?
Earnings season, I think actually, as we're wrapping up, is still been very solid. As you know, the drag on earnings has been energy and some of the commodity groups as well as healthcare. But, groups like industrials and tech are still producing good numbers. I think next year the outlook should be good because cost of money is coming down and we're seeing housing activity pick up. And if there's mergers, this is actually much better for small caps, and small cap earnings growth has been around 40%. So I think it still sort of guides us to the same trades, which is we want to be more cyclical over the next 6 months and then also look at things like small caps and Bitcoin.
In a world that never sleeps, the stock market is always buzzing with new developments, shifts, and the occasional surprising twist. Today, all eyes are on Nvidia Incorporated, a company that has consistently dazzled investors and technology enthusiasts alike. Yet not everyone is dazzled. Fred Hickey, the renowned editor of High Tech Strategist, has boldly predicted a significant crash in Nvidia's stock in the near future. With whispers of an impending downfall, it is crucial for investors to pay attention to Hickey's insights. But what exactly is driving this cautionary tale? And how can investors navigate this potential storm? Join us as we delve into Nvidia's current position amidst this buzz and examine the strategies and tools that might just be the key to protecting one's investment. Welcome back, everyone, to Investocracy.
Small caps. Why mergers? Just give me a little bit more on why small caps are going to be a bigger beneficiary.
Well, part of it is the backdrop. Small caps have underperformed for the last 5 years by really the largest margin in 25 years. They're now trading at 10 times median PE relative, and for the S&P that's almost 18 times, so a 7 PE discount. Small cap earnings growth is faster, and not only that, but roughly 44% of it is what I'd call very cyclical, and that's things like regional banks and industrials. That's a bigger weight than in the S&P. And then finally, there's a lot of cash on the sidelines. And I think if people are looking for breadth expansion, that's small caps.
Well, they also don't have the trade exposure. They get the benefit from lower taxes and regulations.
Yeah, that's a good point.
Without the tariffs also. So it feels like they're in the sweet spot.
That's right. And the margin of outperformance could be sizable. I mean, they've underperformed by almost 100 percentage points. So I think you could recover that over the next few years.
We were mentioning Elon Musk a moment ago. And over the weekend, he endorsed this notion from Senator Lee about end the Fed, essentially. Journal over the weekend with the piece about Powell preparing or being ready to defend a removal if, in fact, he's asked to leave. Do you think the bond market would revolt at any kind of attempts to influence the Fed or re-executivize the Fed?
Yeah, I mean, absolutely. I mean, the Fed is the most powerful entity in the world, and part of it is its independence, and it's something that even the bond market is scared of. I think changing the structure of the central bank would be not good for capital markets.
Fred Hickey's words sent ripples through the financial community, not unlike dropping a stone into a serene pond, except this pond is infested with tech-hungry investors. Are we on the brink of witnessing Nvidia's soaring stocks plummet? Hickey's cautionary tone stems from a variety of market signals suggesting that Nvidia's valuation could be overly optimistic. In the ever-evolving world of tech stocks, one can liken Nvidia's journey to a thrilling roller coaster. Exhilarating highs, but not without the looming possibility of a steep dive. Many market analysts have raised their eyebrows at Nvidia's staggering growth, noting that its price-to-earnings ratio has reached heights that might indicate frothy market behavior. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates.
Does take us to our talk of the tape. Too frothy or just right? That is the debate for investors right now as this bull market continues to run. Let's ask the Wharton School's Jeremy Siegel. He joins us now live. Professor, it's nice to see you as always. This has become somewhat of a Friday tradition, and it's a good one to have.
I enjoy it too, Scott.
Some are calling this setup Goldilocks. Is that how you see it?
Yeah, I mean, take a look at the employment report. In fact, all the economic announcements over the last week have been very close to target. We had a little weakness in the household report, a little tick up in the unemployment rate, but everything else is working exactly the way the Fed wants. I think we're going to have one rate cut on that December 18th meeting, but truthfully, I think only 2 or 3 rate cuts next year. I think this strength could last, and with the stubborn inflation, I think that the Fed is going to settle down somewhere between 3.5% and 4%. Not the 2.9% that they put in the last SEP report in their September meeting.
Nvidia has diversified its portfolio, expanding into AI, gaming, and other revenue streams, often garnering admiration akin to a tech superhero assembling new gadgets. But in Hickey's view, this superhero might just meet its kryptonite in the form of a market correction. Volatility is inherent in tech stocks, particularly those that scale rapidly and redefine future markets. As Hickey proposes caution, investors are keen to explore protective measures. Among them is the concept of an optimal collar hedge, which has been widely discussed as a prudent strategy. This hedging strategy, requiring no prohibitive fees, but rather an intriguing negative net cost, could potentially safeguard investors should Hickey's predictions materialize. Tools such as the Portfolio Armor iPhone app provide real-time calculations for such hedges, allowing investors to instantly assess their risk exposure in an unpredictable market landscape. Amidst all this turbulence, common themes emerge: the ever-present risk-reward dynamic, the need for vigilant oversight of investments, and the importance of strategic hedges. While the market drums up excitement and apprehension alike, Hickey's warning serves as a timely reminder that prudent foresight often guards against unforeseen downturns. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So, okay, one in January or December. You don't sound like you think it matters much at this point that, in some respects, the Fed's been taken out of the game. I mean, Beth Hammack, the Cleveland Fed president today, said, quote, "I believe we're at or near the point where it makes sense to slow the pace of rate reductions." Market doesn't seem to really care.
Well, I think you do care. There is an awful lot, and especially for the small firms, business loans that are based on that Fed funds rate, 1-for-1, the prime rate, what used to be called the LIBOR rate, now it's called the SOFR rate, short-term borrowing rates of corporations and others. So there is a lot that is pegged to that rate. But for the big firms that can access equity, long-term bonds and all that, I mean, all those rate cuts or whatever the Fed is doing is already incorporated in those rates. So in that particular case, that's already there. But it could make a difference for the small and medium-sized firms.
Sure. I mean, I do have some strategists who are kind of looking through all of that and saying, well, S&P can hit 7,000 next year, if not more, at this point, because the earnings picture is going to be good. You're going to get deregulation. You're going to re-up the tax cuts, and you're going to have other, stimulating events around the economy and growth. Do you believe that too?
Well, the current estimate is a 17% increase, so it is very bullish. I think we will re-up those tax cuts, that expire at the end of next year. It would help if we got down to a 15% rate that Trump has talked about. I'm not too sure he's going to get too much more than a re-up on that. Deregulation is always good for the market and particularly good for the small and mid-sized stocks. So, that sector could really shine, while maybe the Mag 7, which an incredible 70% return so far this year, really might take a rest in the market.
Nvidia stands at an intriguing crossroads, teetering between meteoric growth and potential market adjustment. However, it is precisely this unpredictable nature that makes the stock market a captivating arena. Looking forward, Nvidia's innovation trajectory and market potential remain substantial, suggesting that its stocks, while not without risks, are far from losing their luster. For investors intrigued by Nvidia and its dynamic ride, now is the time to consider Hickey's insights without succumbing to panic. The stock's current performance is buoyant, thanks to a series of strategic expansions and relentless innovation. Analysts foresee continued opportunities for growth should market conditions align favorably. Therefore, investors may find value in embracing strategic hedging approaches, assessing growth forecasts, and harnessing tools like portfolio armor to protect their interests. As we sign off on this discussion, we invite viewers to ponder. In light of Hickey's bold predictions and Nvidia's ongoing story, what are your takes on whether it's time to double down or exercise caution? Your insights and strategies not only enrich the dialogue but also reflect the pulse of today's investor landscape. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.